Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is February the 25th. Almost March. Almost spring. Almost spring. All right, well, good morning, everyone. What we're going to talk about today are the pre-market futures, in particular, U.S. dollar. Big action this morning, folks. Stick around. Before we get into the charts, I want to talk about tonight. Tonight's Thursday. When it's Thursday, that means that it's Thursday night stock charts live here on YouTube. Me, live, going over the weekly charts. Let's get together and look and see how the weekly charts are coming together. Do we close strong? Do we fade? And I want to talk about a new look, about how we look on a monthly time frame. How overbought, underbought, or fair valued are we? Think about it. How often do you get that? So, well, from anybody else but me. So join us tonight, 6 p.m. Eastern Standard Time. If you want to get alerted, use the bell button, subscribe to the channel, or if you want to get alerted in advance of us going live so you have time to have dinner, kiss your wife, your significant other, well then go down below and enter your name, not your name, I think it'll ask for your name, just the email address, I guess, and first name, and you get alerted 15 minutes to a half hour prior to us going live. And before we get to the charts, let's talk about TrendSpider, who is our sponsor. We'll be using their software today when we go over chart requests, automate your grunt work, speed up your analysis, and improve your accuracy. That's one of the great things about TrendSpider is that it allows you to improve your accuracy and time your trades with precision. Their scanners allow you to scan for charts. Sit at home at night. Don't do it in the daytime. You get the impulse to buy or sell something. Don't do it then. At least I don't. And when you're sitting there, you're on the computer, run your scans, find those winning chart setups, and of course, they have this outstanding university of very brief, sometimes they're long, but very brief introductions. Then you get comfortable, you go to their heavy duty stuff, you become proficient, and heck, you can even get certified. So use the 35% discount code below. Subscribe now, and I'll show you how to use it later on when we go over chart requests. All right, let's get to the pre-market activity, and we're going to kick things off with, as we're titled, and that is the U.S. dollar. I've been talking about the U.S. dollar and its flirtation with the 90 mark right here. Why is that significant? Well, it's a big fat round number from which to break out of or break down below. Now, Macarta, good morning. YOLO with coffee. I'm sipping it now, brother. Yeah, we'll go over AMC and GameStop. We're actually long of AMC, and I booked profits after hours, so we're out of it now. I can't sleep holding those stocks, so they showed us a profit. We got out. I'm sure some members are still long of it, but not me. Dixie, head and shoulders setup. Left shoulder, head, right shoulder, neckline broken. And we are on our way down. Down. We haven't been this low since January the 8th. Not that long ago. Seems longer. Now, when this thing gets going in the wrong direction, and I believe that it already has, is when it breaks, weekly chart, when it breaks the lows of March of last year. And that low is 88.94 on the U.S. dollar basket, the Dixie. So the trend is clearly broken. We were making higher highs, higher lows. We are now firmly in bear market territory. So why does this matter? Well, it matters if you're long of commodities. Remember that many commodities are priced in U.S. dollars. As goes the U.S. dollar, inversely goes the prices of those commodities, some more so than others. A particular beneficiary, this is brutal, 30-minute chart. A particular beneficiary is the price of gold. Now, gold is down in the session, surprisingly enough. That tells me, I haven't looked yet, that tells me that yields are probably higher. Could be wrong, but we'll go to that chart in a moment. The miners yesterday were outstanding. Silver, gold, both were up big, and we're long of both. Now, gold was down yesterday, couldn't eke out a gain. So what that tells me is that while we are in a downtrend here, that we are coming to the end of this consolidation. The miners are telling us that. The dollar is telling us that. Take note of the higher low off of the lower band of support down here. We bounced. We're not failing and retracing back down to support. We may, for all I know. We've done it many, many times. But I think what we're going to do here, especially if bond yields decline along with the dollar, we break out. Silver. I think we're poised for a continuation breakout. We're up 0.75 percentage points. Silver was up yesterday. The silver miners, they beat the you know what off of the gold miners. I mean, they were up 4%. Huge move yesterday. Let's take a look at other precious metals for a moment. We are going into a commodity bull run. We're already in one, but it's in the nascent phases of it, where you get a lot of backing, filling, indecisiveness, equity strong. Nobody wants to be in commodities when equities, the hot EV stocks and SPAC stocks are rallying. Palladium this morning, down in the session, but I mean, we ripped yesterday, and we broke out. 4-hour chart again, we broke out. Where's platinum? Platinum has been flirting with a breakout. And here we are. All right, so we're in a very, very tight, this is very interesting. We're in a very tight triangle formation. We're at the apex of that triangle formation, meaning we're either breaking out or breaking down very soon. I think odds favor bulls here. It's flirting with support. But I'm fairly confident, given the price action and direction of the U.S. dollar and the fact that yields are probably going to rally soon, with bonds a little bit extended to the downside, and they showed signs of bottoming yesterday. I think that we're going to get a pullback in yields, pullback in dollar, rally in commodities. Good morning, Eric. I don't know what it is, brother. They keep blocking you. I'm blocking you. How dare they? There you go. Good morning to you. What else do we have? I want to take a quick look. We'll take a look at other commodity prices. I really want to take a look at yields because it's all about yields. With the dollar now breaking, all eyes are on the 10, 20, 30-year bond notes. I don't care too much about the 3-month or 2-year. Those are all heavily manipulated by the Federal Reserve. New daily low. This is why you're not seeing gold and silver ripping right now. This has got to get resolved. This is what's propping up equity prices. The declining U.S. dollar. It's helpful to exporters. Declining U.S. dollar is horrible for the consumer. It's inflationary. And with the rising yields, the cost of borrowing is going up. So the consumer here is really getting walloped because we import the vast amount of goods that we consume. The price of those goods I'm not even going to say it anymore, Eric. I'm just going to unhide you. I don't know. It's ticking me off that they're doing that. Let me see if there's a profile setting with you. No, they can't let me stop them from blocking you. Here, show it. It's a smiley face, for Christ's sakes. I forgot where I was. Oh, U.S. dollar hurts the consumer along with rising yields. Borrowing costs are going up. The purchasing power of the U.S. dollar is in decline. It's good for corporations, a weaker U.S. dollar that export. Oil is definitely an indicator. I think it's overbought. I think it's a great point to bring up. The 10-year is my usual benchmark, but the 20-year as well. But we can take a look at the 30-year. I'm actually long now of the TLT, but we're using call options going way out. I mean, we're out about, what do we got? The May expiration, because I wanted to give myself time to be wrong. And we opened them up right here. So we're down slightly on that position. I'm still confident that it holds. So the 30-year bond, the TLT is the 20-year bond. 30-year bond is down on the session. But take note, we're putting in lower highs. But here is where the story gets interesting. Here's a little bit of a divergence on RSI. RSI, we are, yes, still putting in lower highs, but we are seeing some directional change here as we are beginning to drift higher with higher lows. So you got to start somewhere, right? You don't want to get overweight at this point. But I'm expecting a breakout on RSI as soon as today, if not tomorrow. And we should see a good counter trend rally in the bond market. And that'll boost stocks. But if you join tonight, I'm going to show you on a monthly chart. I used a different chart setting, which I learned from somebody else, and it shows a different smoothing mechanism for moving average and how far extended we are away from it, and it's pretty telling. Now I'm confident that the market right now is buying into Powell's jawboning of the market higher. But the question people need to ask themselves, if Powell's got things under control and the market was selling off because of rising yields, well, frankly, folks, ever since Powell spoke, both Wednesday and Thursday, yields have only gone higher. It's very difficult for the Federal Reserve to manage longer dated yields, your 30-year, 20-year bond yields. It's far easier for them to manage 3-month, 1-year, 2-year bonds. So Nobody seems to be paying attention to the fact that yields are actually higher since he spoke. And this market extremely extended. Let's check in with agriculture. Ag is not behaving well either to the US dollar. You would have thought that we would have seen a move higher. We're consolidating. We're certainly not breaking down. So that's corn prices taking a pause. Let's take a look at soybeans. They're up. Woof, they're ripping. They're ripping. Let's take a look at a weekly chart really quick. Look at this. Now, soybeans get the message. Inflation. Let's go to wheat. Wheat's getting the message. The message, can't speak. Still on that first cup, folks. The proverbial first cup. And it's a big first cup. Wheat futures are technically down, but this is a bullish chart. Very, very bullish chart. We're nearing recent highs, the highs of January. This is a nice cup. I would expect to see a cup with handle formation. If we just blow through those resistance levels of January, it's really game on for ag. Now here's the 2-year note. It's falling as well. Even the yields on the 2-year are rising. Tonight we're going to check out the Fed's balance sheet to see if it's expanding, sideways consolidation, or what. Because you would think that these guys would be in there managing the yield curve, and frankly, they're not. Let's circle back. Nat gas got beat up yesterday. Are we bouncing? Yes, we are. Way too early to call a bottom here. Light sweet crude. I think it was McCarter that asked about. Yeah. Light sweet crude continues its trajectory higher. The caveat here is that we're nearing resistance at around, let's call it $64 the barrel. Hey, Sam. How things over in Italy, pal? Now, I'll warn light sweet crude. We have a bearish divergence setting up here. We're putting in higher lows and higher highs. Good stuff. Can't argue it. Very bullish. The problem is here. We're putting in lower highs on RSI. Now, to be fair and to be accurate, we have broken out. The question is, do we hold it? We may just pull back and do a retest. So oil, I'm a little bit cautious on right now. A wee bit. Perhaps a healthy correction. VIX futures. Now, one thing I have to say about the VIX is that this gap up has been defended. We gapped up the 16th. Let's do this. We have filled the gap, and at current, we are down below support. We have more support down here. So for an index which saw the S&P 500 move up nicely yesterday, the VIX has been fairly solid with this gap up, retaining those gains. I'm going to go to the comments in 2 seconds. As you can see, a lot of comments coming through. Sam, Bob, I ordered from UK and they have to give me back my money because right now what'd you order from the UK? Oh, the shipping. Oh, I see what you're saying. The cost of shipping and transactions have changed. I get you. Hey, Paul. Good morning to you too. All right. So, with all the bullishness yesterday, I am not in the camp of being overly bullish on this market. I think that the market has been sending us signals. They've been sending us signals since the GameStop, AMC, BlackBerry rally, and guess what? They're back. This type of speculative mania is bananas. It's absolutely bananas. You know, AMC, which I bought yesterday, I sold it after hours. You could make the argument that their movie theaters are going to open up, and you could talk yourself into the trade. Listen, it's a heavily indebted stock with not much in cash. So I personally have ongoing concern issues. I have no inside information, but it's concerning. They moved up on a headline out of one of their shops in New York City, one or more, opening up. I wish them the best. I love AMC as a product, as a company. But as a stock, it concerns me. Now, GameStop is archaic. There's really no argument here for this stock to be up here that I know of, unless they're going to start buying Bitcoin and they're going to play that game. But watch this. They come out with a headline this morning. They buy Bitcoin. You have a major Bollinger Band squeeze set up here. And sure enough, the shorts got whacked after hours yesterday. And they're going to get whacked again today. Take note of this higher low. And it appears as though we're going up higher. Am I going to buy it? No way. No way. We'll short it when it's right, like we did the last time. And we did well. But it needs to get to extreme overbought levels before we did that. And I think we were at RSI like 98 when we shorted it on a daily time frame. It was ridiculous. Now, AMC is higher than where I sold it. We sold it at a little over $10 a share. Our basis cost is about $8. And it looks as though we're going up higher. And the same thing's happening here, where you saw this big rapid ascendance, big sell-off, very tight Bollinger Bands in here. And when you begin to see them widening out, that's your indication you're about to get squeezed in one direction or the other. And that was the tell for this trade. You knew exactly where to put your stop. And it even happened with BlackBerry. Not as much of a Bollinger Band squeeze. It looks as though this went up in sympathy with the other two. All right. That's my tail of woe. Quick check of equities. The Russell 2000 I think it's important to note that we have on a 4-hour time frame, we have a megaphone formation. For those not familiar, a megaphone formation is when you're putting in lower highs, actually higher highs and higher lows. This is not quite higher highs and lower lows. Still first cup of coffee. In this case here, we're very close to having that chart set up. We're definitely putting in lower lows. So if this fails to take out resistance, which would resolve the megaphone formation, we're retracing to all the way back down here, which if it follows suit, we're going to take out the lows of the week at some point in time, this week, next week, whenever. Now, if we break out, different story, I have to sing a different tune. But we are at resistance. Bond yields rising. But stocks have a lot of faith in Yellen and Powell. The S&P 500 is down slightly. Let's call it flat, to be fair. We did break out. I have an alert set up here to see whether or not this breakout fails and we drop back down into this trading range. If we do, if we close on a 4-hour time frame back down in this trading range, we're coming all the way back down here in all probability. That's a breakout point failure or a bull trap. What's really propping up this market right now is oil. People are looking at oil, and it's driving energy companies up higher. They're looking at oil, and they're saying, wow, look at oil. Everybody wants oil because the economy is opening up. So that's sending the transports up higher. If oil begins to move lower, I think that you could see some weakness in equities. So watch oil. And as I pointed out earlier, we're nearing resistance, very close. We're about 25 cents away from resistance. And RSI is putting in lower highs. Let's go to, I'm running out of time here. We'll do a couple of chart requests. I got to go to members first. We have a portal where the members enter their ticker requests. All right, let's see what we got today. Six Flags, X1, not much today. Oil weakening up here a little bit. I think oil is the issue to watch today, along with the U.S. dollar. You would think that with the dollar breaking key support, oil would be ripping up higher. It actually appears to be weakening. Well, I shouldn't say weakening, losing momentum, to be fair. All right. You know, before we leave this chart, this is the last chart we went over yesterday morning. It was a chart of Amazon, and I warned about it. And I'll tell you, we only have, 3 days left in the month? 2 of them are weekend days. So 2 trading days left. And Amazon is setting up for a major breakdown here. This is a bearish reversal bar. We were in a long multi-month consolidation. And Amazon, at current, this could all change. Maybe we'll close at the highs of the month, for all I know. Technical analysis is all about probabilities. It's not a crystal ball. But at current, the market is telling us Amazon is not loved. And we could be breaking down. In fact, we are breaking down to make it more assertive how my opinion is that we really need to see a major rally within the next couple of days on Amazon. Because if we put in a new lower low in March, look out below. All right, to Six Flags. Price got better, I think, since the last time we looked at it. This is a monthly chart. We have a monthly breakout above resistance. Let's take the automated trend lines off, clean things up. There we go. I like to go over the charts first without the automated trend lines. That way I get a feel. I don't want them to influence me. And I want to always check and see whether or not my skills of identifying. Yeah, look at that. Boom. I think I nailed it there. My skills are still sharp. And you could see that what was support back here in, I don't know what month this is because my toolbar won't go down. What was support back here, hopefully you can see my mouse, I don't know what month this is now acting as resistance. So I would not buy here. We'd be buying into major resistance, weekly chart. Well, before we leave the weekly chart, let's throw up our automated trend lines. Now, the automated trend lines pointed out that we did rally through resistance, which is great stuff, in red. Now, what I want to do, I'm not going to use the monthly chart for alerts. We'll do a deeper dive. Weekly chart. You can see topping action at these resistance levels. Let's take the automated trend lines off. Here's the value. Pop. The high of the week is right where resistance was. I don't think this can be bought yet. But we will identify a good entry point. So this is the manual line I drew. It's pretty solid. Now let's identify a good risk-reward entry point. We could use this daily line here, but what I'd like to do is find on a monthly chart, I'm going to overlay monthly resistance on a daily chart. And here is where it really gets attractive. In dashed line is a secondary overlay of support and resistance. So this is a daily chart, but I'm overlaying both daily trend lines and monthly trend lines. I like it here at monthly support. I'm going to keep a little bit of sensitivity on. We're looking for a pullback here on Six Flags. And this trade depends upon the optimism that hopefully pervades the economy that we are going to open up. If we lose that confidence, then, and that's why you're seeing the Dow, energy, transports move up higher, is the confidence that the economy is going to continue to open. If we lose that confidence, well, that's a problem. So around 40 bucks a share, very interesting on Six Flags. I would wait for that to get hit. X1. Sam, they blocked you for your foul language. How dare you? I just unblocked you. Let's take the automated trend lines off. Again, I don't want to be influenced first. We'll use them later on. All right, I don't need automated trend lines here. We need to avoid this. This is not going to end well. We're trading above the third standard deviation Bollinger Band. I think this is the same look that we had the last time. I think we've even pulled back further from the last time we looked at this. We're very extended, huge, huge topping tail. We're much closer to the bottom of the lows of the month than we are to the highs of the month. So this is an indicator that you have profit taking. And we're still trading above that third standard deviation Bollinger Band. Weekly, as a matter of fact, I don't know if they have monthly resistance levels yet. They have support levels, no resistance levels yet, not enough data. Weekly chart. So we broke out above resistance. I have it highlighted here at around 49.50. But they closed it above that resistance level last week. But this week, it failed to hold it. Excuse me, 2 weeks ago it broke out. Last week it failed to hold it. Continuation breakdown this week. We're off the lows of the week. This is very close to a spinning top formation, a sign of indecision. Daily chart. We flashed a blue star raindrop, which is the same as a doji star formation. It's a sign of indecision. We moved up after that blue raindrop. That leads me to believe that we may rally up to 59.50. The question is, do we break out above resistance or do we put in a lower high? I don't know. Me, I don't like the trade. I don't like the monthly time frame. We're overbought. This market goes. This stock is going along with it in all probability. But we may just pop up higher here. I would watch for resistance at 49.50. So those are my thoughts on X1. Yeah, volume was lower yesterday on X1. So volume is coming in. That's a fair point to make. Lower highs on volume. The day before yesterday was pretty good. But yesterday, definitely light volume. We'll leave off with Paul and BJ. And I got to get going. BJ's. I'm a member of Costco, but I love these stocks. All right, so we'll begin as we usually do. Higher level view, monthly chart. I like this setup. We have a breakout. We're retesting, or we have retested the breakout point. It held. We rallied off of it. That's really good to see. We have good support below. $36 per share. Let's see if we have any automated trend lines. Not much data here. That's surprising. Weekly chart. So here's the breakout. We rallied. We got extended relative to the third standard deviation Bollinger Band, pulled back, retested. Continuation breakout. Rough day yesterday, but the good news is this. I shouldn't say yesterday. Rough price action this week, but we're holding the 42.44 mark, which is good support. It's right where this volume shelf is. So if we do rally, we have a lot of space between, if you were to enter right here, right now, at around the 43 mark and up to resistance, which is around, this is rising too, at around 54.50 per share. So as long as you're using tight stops, low risk, and some good upside potential. You're welcome, Eric. Anytime, brother. All right, everyone. Have a profitable trading day. Hopefully, I speak with you tonight on Thursday Night Stock Charts Live, 6 p.m. Eastern Standard Time. Again, if you're not on our email list, there's a link below. Join any one of them. I have a 5-part video tutorial on my 5 most powerful candlesticks. That's free. Even if you opt in for that, you're going to get alerted 15 minutes to a half hour prior to us going live. Till then, everybody stay safe, and I will talk to you soon.